Banking sector in Vietnam. 1. Overview. Vietnam's banking sector has shown significant improvement, which results from stable inflation and interest rate, favorable environment for foreign direct investment, and a shift from deficit to surplus of the country's current account. This sector plays a crucial role in Vietnam's economic development in recent years. 2. Banking system. There are two tiers in banking sector in Vietnam. The first one is State Bank of Vietnam, SBV, which is responsible for monetary policy and supervision, regulation of the banking system in Vietnam. The second one consists of commercial banks, financial companies, credit cooperatives, people's credit funds, and insurance companies. The main activity driving banking system is commercial bank, which includes 5 state-owned commercial banks, 33 joint stock commercial banks, 5 joint venture commercial banks, and 5 wholly owned foreign-owned bank. 3. Potential opportunities for foreign investment. There are solid evidences to prove that Vietnam's banking sector has such a huge potential for foreign investment. Government effort of reforming banking system. SBV suggested that merge and acquisition of loss-making and incompetent bank would be necessary to improve efficiency within the industry. Trade agreements facilitate foreign ownership and investment. Have taken part in variety of trade agreements such as Trans-Pacific Strategic Economic Partnership, TTP, Association of Southeast Asian Nations, ASEAN, and Free Trade Agreement with different countries. Vietnam has made restructuring move to standardize banking system which will be compatible and accessible to other countries. Vietnam is required to have bilateral arrangement which eliminate the challenges of foreign establishment of banking services. The government also encourages foreign investors to hold shares for 5-year period and partnering with a local bank to enhance management, capacity or new development. With the 30% limit of overseas ownership to domestic banks, the strategic foreign investors are allowed to acquire up to 15% of share in a bank, and up to 20% with prime ministerial approval. Vietnam, a destination of foreign investment in Southeast Asian market. There is a huge untapped market in Vietnam. According to SBV, only 20% of more than 90 million citizens in Vietnam hold bank accounts and 3% of the population have credit cards. With 87% of the population under the age of 54, there is a great opportunity for retail banking activity development in Vietnam. Also, it is agreed that SME and rural areas have had challenges to access bank investment and loan. The data of Asian Development Bank shows that lack the capacity to assess the risk of investment into SMEs and find bankable projects, and lack of knowledge about loan and lending systems for rural citizens are the main reasons leading to current underbanked circumstances. The stable economic with GDP growth of around 6% to 7%, low wage costs, a large population with a high savings rate and lack of innovative approach to the market are advantages for foreign investors to accelerate financial and industrial development in Vietnam market.
How A&T Consulting could help your business. Please click here to learn more about A&T Consulting or contact our lawyers and consultants in Vietnam for advice via email and at antconsult.vn or call our office at +84 28 730 86 529.